Good afternoon. My name is Pawan Jaiswal. Today is 29th March 2023. So this is the last webinar of this particular month from our side. And the market is also trending in volatile manner from the last so many months, almost I can say the first week of December. So it is almost 4 months, December, January, February and March. From the last 4 months, market is consistently trending in downtrend. So let's discuss how overall market and sectoral and major sectoral indices are placed. But before discussion, disclaimer from our side that whatever we are going to discuss in this webinar should not be considered as a buy or sell recommendation. And whatever we are going to discuss is, please consider it as an educational purpose only. And we are not having any exposure. We are team of analysts are not having any exposure in any particular stock or any particular stock. Okay. So this is the current market condition as per O'Neill methodology of market direction. And if you see O'Neill methodology of market direction, our major benchmark index Nifty 50 and Sensex both are in rally attempt. And apart from Nifty 50, other major sectoral indices like bank Nifty means and financials both are in rally attempt. But another major index apart from bank, that is IT is still in correction mode. Auto is in correction mode, and FMCG and metal are also in correction, under pressure, I can say. So, and another thing is that if you see last 3 months, except FMCG, almost all sectoral indices except FMCG has generated negative return. So from the last 4 months, almost I can say overall market sentiment is quite bearish and consistently market is trending in downward trajectory. But from the last almost 2-3 weeks, I can say, or in this particular month, it is not ready to move beyond certain level, that is current level. So let's move on chart to discuss further more technically. So this is a chart of Nifty 50 and Nifty 50 chart. Here, if you see overall price structure here is a lower top, lower bottom formation. Like here, if I say this here consistently, market is trending in downward formation only. That lower top, lower bottom formation. So one thing is this price structure on daily chart and weekly chart both are showing negativity. If I talk about volume, so see here in this particular range area here, in this range, volume was comparatively high compared to this particular area. So I can say that in this particular region, there was a elevated level of volume, and because of that, market has fallen further, maybe below 17,000. Today in intraday, it has crossed 17,000 and closed above it. But in last few weeks, actually, market has performed in very bad manner or bearish manner. If I talk about technical perspective, so there is a pattern on the multi-time frame chart, like daily chart or weekly chart. So there is a chart that we can see over here in MarketSmith only, that this chart. And on this chart, if you see, there is this pattern, or I can say the downward sloping channel. So Nifty is trending in this downward sloping channel here, this shaded area in between two parallel red color line. Another is this RSI. So if you see from December onward, December first week onward, RSI is consistently moving below 50-55 level, and that is why I can say the market is showing quite bearishness. MACD, if I talk technically, so that is also trending below this central line, the zero area line, and because of that is also happened from second week of December. So all these technical indicators are showing negativity. If we check on weekly chart, so weekly chart, there is a one strong pattern, or not pattern but strong support, that is 100-week moving average. Here I have not plotted this 100-week moving average in weekly chart, but if you see the placement of 100-week moving average. So that is placed around 17,000 kind of level. So 17,000 is a critical level. In last webinar also, if you remember, I have mentioned this level. This 17,000 is a critical level to watch when we have written this in our weekly and monthly report also. That below it maybe fall further toward 16,800 followed by 16,500. But this time it is managing to hold 16,800. And maybe reason behind this is that this daily chart, that downward a lower band of this channel. So lower band of this channel is placed around the 16,800 kind of range. And that is why maybe technically index is taking support around that. Apart from other fundamental reasons, obviously there are various fundamental reasons like global market and other factors. But now March is going to complete, and maybe second week of April, earnings season will start, or this particular this quarter earning season, as well as annual earning season will also start for this whole financial year, that is 22-23, and maybe that is going to impact the market much more. But technically, at current juncture, this level of 17,000 is a critical level to watch because 100 DMA is placed around that. Above it, actually, market may remain traded with little bit bullish. I'm not saying the trend will change, but little bit bullish bias. But below it, negativity will be there. Meanwhile, from the last almost 10-12 trading sessions, Nifty is trending in range bound zone, that is 16,800 in downside and 17,200 or 250 kind of levels in upside. Either side breakout at current junctures, what I can say that either side breakout may lead index at least 300 to 400 points in that particular direction. Now, today's move was happened. Today's positive move was happened in market because of this monthly expiry, or I can say yearly expiry, financial year expiry was also there today. So there was a bounce back. If you see the today's data in derivative report we have presented, that the maximum call OI was built up was seen at 17,100 and put OI was seen at put OI was maximum put OI built up was at around 17,000. And that is why I can say that market respected that level, and today it has closed above 17,000 but below 17,100. So that is different thing. That is for short-term point of view or expiry point of view. But overall placement like above 17,000 and below 17,000. Below 17,000 it will remain pressure in coming days. And above 17,000, I can say at least 200 to 300 or 400 points of movement. I am not denying. Meanwhile, at current juncture, from the after considering last 12 trading sessions and today's trading sessions, I can say maybe on Friday or not on Friday, the next week, market will try to cross upper band of resistance, that is 17,200 or 250 or 300 kind of level. And in such case, suppose it will cross that level, so maybe one can expect 17,500 or 17,600 kind of levels in next couple of weeks. And afterward, earnings season will start, and then earning in various Nifty 50 counters or top 100 companies is going to lead the overall so in the market. So next, when we will do next Bazaar pe Charcha, maybe earnings session will already in line, and few company, maybe TCS or like that company would have been already presented its quarterly earning. But meanwhile, it looks like there is some short-term positivity is there in Nifty. Maybe holding above 17,000. Maybe next target would be 17,250 or 250 or 300 or maybe 7,500 kind of levels maybe there. In downside, reaching below 16,800, maybe next target would be 16,500 or 400. But meanwhile, overall bias is showing some short-term kind of recovery in market, or maybe in next coming few days, maybe next week, there would be some positive actions in market as per current data point of view in Nifty. Likewise, in Bank Nifty, if I talk about in Bank Nifty, so Bank Nifty 200 DMA is placed around 40,000 kind of level. So that is why I am saying that this 40,000 is a critical level to us. So there is two reasons. One is this psychological level of 40,000. Another is coincidentally this 200 DMA. So 200 DMA is also placed around that level. So that is why I would like to say 40,000 is a level to watch. Maybe holding above 40,000, we can expect further upside. And positivity may turn up to at least next target, that is 42,000 kind of level. So 400, 500, 4 to 5% move, 4 to 5% move cannot be denied in Bank Nifty also. Once it will remain holding above this 40,000 level, that is 200 DMA. Otherwise, it will remain traded in sideways only. So both Nifty and Bank Nifty at current juncture is showing some kind of positivity for short-term perspective. Please mark my word that the short-term perspective. I'm not saying that trend will change from here, but maybe some recovery may happen in coming days. So this is the current placement in Nifty and Bank Nifty. Apart from this Nifty and Bank Nifty, another index I would like to discuss with you, that is Pharma index. And if you remember our last webinar, that Bazaar Pe Charcha, I think it was happened in the mid of March. So on that day, we have clearly mentioned in our monthly report also, we have mentioned that low downside fall is very limited in Nifty Pharma index. And market, this Nifty Pharma is exactly behaving as per our expectations that we have mentioned in our report as well as in previous webinar, March month webinar, that it has not fallen below 11,500 and there is some recovery happening. Another thing is there, if you do the component analysis of this pharma index, so there are few pockets are really looking quite attractive at current juncture. Like Oro Pharma, last I think if I'm not if wrong, then I have already mentioned that Oro Pharma is looking quite attractive and Oro Pharma is really did well. Glenmark Pharma is looking good. Some so all these stocks are even Dr. Reddy is showing some sign of recovery. So I'm not saying that there is a trend change. Maybe 12,000, 12,300 is a level to watch in this pharma index. Suppose this pharma index will cross this 12,000 followed by 12,300 level and remain holding above that, then I can say that maybe there is some sign of trend reversal in pharma index. But meanwhile, I can say this current ongoing bounce back rally may extend further toward at least 12,000 or maybe 12,300, 400 levels in coming days. So there is some positive bias from short-term perspective in this pharma index also. So pharma index is showing some resilience in current juncture, and maybe it may move toward 12,000 followed by 12,300 or 400 kind of level. Even today, it has already crossed 12,000 level and closed around. No, today's closing is around 11,900 around. So maybe in coming days, it will cross 12,000 level and maybe followed by 12,300, 400 kind of levels may be achievable in pharma. So pharma is also from short-term perspective in next few days, next week of perspective, there may be some recovery in pharma also. Okay, so I have discussed Nifty, Bank Nifty and Pharma. Now, Tisha is there, he will discuss few sectors.
Thank you, Pawan. So, my name is Yatisha. So, I will be sharing a few key sectoral indexes. So, let me start with Nifty Realty. So, this is a Nifty Realty chart, monthly chart. So, if you see from last four months, actually, December, January, February, March. So, all the 4 months it has been generated a negative return. And also if you see the retracement level of from the lows of 2020 to the highs to the recent high like 555, it has 560, that retracement 0.5 retracement has been already retesting right now. So if you come to the weekly chart, so its trend is clear. So it's right now it's trading in a negative zone and trading at a key support level, that is 370 level. So even if you are and from the last webinar, we are saying that 370, 365 is a key level to watch on the downside. So if it breaks below this level, 370, so we might see another we might see 350, 340 kind of level in Nifty Realty. Looking at the RSI and MACD, upside is very limited. So even if it if there is a slight rally, like pullback rally, it might head toward 420, 440 kind of level where it has 50 DMA is placed. So overall bias is negative, sideways with negative bias. So this is regarding Nifty Realty, and the next one is Nifty IT. So even here, on the monthly chart, the key thing is it has given a bearish flag pattern breakout. So there is a pole over here, pole and a flag pattern breakdown. on the Nifty IT on the monthly chart. So this is a bit worry for the IT sector, IT index, and the core key here will be the next upcoming earnings from the key. So basically, like IT companies are generally give more outsourcing. They get more revenue from US companies, and the recent banking BFSI, which is happening over banking crisis in the US, will be the key driver for Nifty IT companies in the upcoming quarters. So already, if you see the Accenture and major companies, it has reduced the guidance for the next upcoming quarter. So the future guidance will be the key for Nifty IT in the coming quarter. So on the technical front, it has already it has given a breakdown from the rising wedge pattern, and currently trading near its previous low, that is the 27,850 kind of level. So even if right now it's trending sideways, so next level of support will be the 26,300 will be the next key level support. So it likely to trade and on the upside 31,100. So these two where it has made a last time it has made an attempt to break out, but it has failed. So 100 DMA 31,100 will be the key level to watch on the Nifty IT. And the next sector is Nifty FMCG. So despite all the negative side in the market, Nifty FMCG is stood long, and it's trading sideways, and it is not giving up any major losses in this current market. But overall trend is sideways. Even if you see the top 4 companies like ITC, HUL, VBL. So all these companies got the CP. It is making a very good bounce back from the lower level, as well as trading at all-time high, near its all-time high. So overall trend is positive from longer time perspective, unless it's trading above this 44 this trend line that is comes around 44,000 level. On the upside, 46,400 will be the key level on the upside. Even if that level breaks out, then we might see another 2,000 kind of rally. Right, but right now this sideways trend likely to continue till another 2 weeks kind of level. And let's wait and see how it responds in the upcoming month. And the last sector is Nifty Energy. Though Nifty Energy is in a rally, because in the especially in the last week of February and first week of March, it has made a as per O'Neill condition, it has made a rally because of all the Adani related stocks, which has disturbing this index, and also Reliance has been broke below its key support level. So it's trading in the sideways range from the last 2-3 weeks, and overall sentiment is also here negative to sideways range right now. So even if there is a small pullback, we might see it might head toward 24,000 level. So that is the first level of we might see in the upside. Downside. So overall trend is here also negative with sideways bias on Nifty Energy. Also, if you see, it has already retraced 38.2% retracement from the overall recent correction, recent trend in from 2022 to the recent high. So it has already corrected. So there is a small pullback we are seeing right now. So even if this sustains, then we might see it might head toward 100 DM. So this is regarding Nifty Energy, and Pawan will continue other 2 sectors like metal and auto.
Okay. Please stop your screen so I can
Okay.
share. Is it visible? Nifty Auto.
Yes.
Okay. So Nifty Auto, it was in bullish trend actually. But from the last few months, it was struggling to cross a level of 13,500 kind of level. And finally, after almost 4 months of consolidation, this consolidation range, if I draw a line, this consolidation range actually. So finally, after almost 3-4 months of consolidation, here it tries to break down, but another day it has bounced back. But finally, this time it has break down here. This consolidation goes consolidation zone. Further, it has break down. It's a 200 DMA, also 200 exponential moving average and simple moving average both. And meanwhile, currently this auto index is trending below 200 DMA. So sentiment has turned quite negative from short to mid-term perspective. Unless and until it will not cross and hold a 200 DMA, which is currently placed around, I think 12,500 kind of level, then our bias would remain quite negative from short to mid-term perspective. But maybe this sectoral index maybe get triggered from this Q4 earning. Let's see how companies are going to present its Q4 earning, and then that will be the decisive point for this particular index. If earning will recover in this quarter. So maybe because I know last time fall was happened mainly this recent fall was triggered only mainly because of this earning numbers, and earning numbers were not as expected, especially from the Mahindra and Maruti, and because of that there was a fall happened in this index, and now it has reached this consolidation range. Suppose earning will be numbers will be there very good in good shape, then maybe recovery will be there and index will move once again. Otherwise, it will remain traded with negative bias. If I talk about support point of view, so this level of 11,500 kind of level has a strong support because there is a breakout level. If I draw a trend line here, this was the breakout level, and another is this particular range. So this particular range is a strong breakout level here, and that is placed around 11,600 or 11,500 level. So after considering all this, I'm not saying that it may not fall from here, it may fall from here. And maybe sentiment will change once earning good numbers from the major companies. Otherwise, it will remain traded in sideways only. Meanwhile, as such, as there is no as such positivity, yes, maybe fall. It may fall a little bit more from here, maybe 2-3% in coming few weeks actually. So negativity is there. I would suggest not to take any position now in this particular space. It is better to wait and watch for next couple of weeks. Then and let's wait for this Q4 numbers. Maybe that would be the trigger point for this particular sector in coming days or coming weeks. Another index apart from this, let me first clear. Apart from this is pending from our side to discuss is this metal. So you know that there was a catastrophic fall happened in this metal index, mainly because of this I think Adani Enterprise, and now majority of the index, majority of the stocks or majority of the component of this particular index, be it Tata Steel or JSW Steel, not doing good. And there is a reason, fundamental reason is that now China has opened, maybe that China is going to compete this Indian manufacturing, steel manufacturing companies or metal producers. And that is why all these other companies are also not doing good. So now structure or overall shape of this particular index has now deteriorated, momentum has deteriorated. So maybe another thing is that it is already trending in this downward, already trending below all key moving averages. There is a fall and other things. So maybe one can expect fall from here in coming days and weeks. Last time, if I remember, we have mentioned this level of 5,200, then followed by 5,000 kind of levels. There was a it has fallen up to 5,200, and there was some recovery happened, but it has not crossed earlier this high, this particular high, which was placed around 6,100, 6,000 level. So maybe in my opinion, 200 DMA is also pressed in that range. So unless and until it will remain traded below 6,000 level, I can say it will remain traded in bearish trajectory only. And in my opinion, at least after considering a lot of fundamental factors and doing multi-time frame analysis, at least it is not looking that much attractive to me at current point of time. So maybe in coming couple of weeks or coming few weeks actually, or coming couple of months, maybe this sectoral index may show some lackluster trading weeks and months. So maybe so overall bias is not bias from my side, at least in my personal opinion, is not looking that much good, or maybe some sideways with negative bias, not looking attractive at current juncture. So I would advise, but I'm not saying that it will not give trading opportunity. It will give, but it is not looking that much attractive like it was looking earlier 3-4 months back, or maybe before December actually. So we have discussed almost all major sectors. Nifty media is there. So Nifty media down, clear cut in downtrend. That's what I would like to comment about Nifty media. As there is no any sign of recovery or bounce back in Nifty media. So that's it. That's it from our side regarding Nifty media. Now let's move to our query session. And there is a very first query query from Vinod. And he is asking Adani Enterprise and Adani said Adani Special Economic, that's Adani Port, I think he's asking. So see, if I talk about overall opinion about this Adani group, so now it is not a matter of technical analysis, to be frankly speaking, or not a matter of a fundamental analysis. It is a purely different game is happening over there. Now it's all about that future plan, future expansion, liquidity, and everything. So let's see how company or Mr. Adani is going to act in this particular tough situation, and how he will come out from this. So I don't think so. It will trend will reverse from here suddenly. It will take few more months and quarters to get settled down the things. So it is not a matter of analysis or not a matter of fundamental any kind of analysis. It's all about companies' action in coming months and quarters. So it is not, at least in my opinion, it is not fair to discuss any levels in all these stocks. But yes, in between, there would be a lot of ample opportunity will be available in market to trade from trading perspective. I'm not denying for that any particular Adani stocks. And if I talk about this Adani Enterprise and Adani Port, so that is the part of future and option derivative segment. So there is no this bar of restrictions of this circuit filter. But other Adani stocks like Adani Transmission or Adani Green or Adani Total, all are part of 4-5% circuit break. So I would not suggest anybody, after considering risk management actually, I would not suggest to go aggressive on that, because क्या होगा कि सर्किट में ही ऊपर जाएगा और सर्किट में ही नीचे आएगा, तो that will not give you opportunity to buy at right time and exit at right time. So it's your money, you have to play with it tactfully. That is it's your wish. But meanwhile, we generally try to avoid such type of companies where there is some problem is happening, maybe fundamental side or news side or any particular side. So we don't want to give any comment whether to buy or not. But yes, it will take time to get settled down the things further, another 3-4 months or maybe 1 or 2 quarters. Ultratech. Take 1 minute. Let me clean. Okay. So Ultratech, if I talk about. So as per O'Neill methodology, this RS rating is quite attractive. It is already falling in blue dot. And another thing is cement companies are doing good. And out of that cement company, Ultratech is comparatively doing really good. Even the last few months, we are consistently saying that we have positive bias about this. Even though it has not given any major breakout or major move in upside, it is trending in consolidation. As per O'Neill methodology, there is a stage 1 Cup handle formation, looking attractive to us. If someone is able to manage the volatility, current volatility of market, one can take positions. Even today there was a positive action along with a good volume here in today's trading session. So looking attractive to us at current juncture. One can take or one can accumulate this counter with a stop loss of recent immediate low that is placed around 6,990. Okay. Another is
SBC.
We are not tracking this, na? Shivali.
No.
So we cannot comment. So can you throw some light on persistent system and Tech Mahindra? So let's check persistent first. So persistent is an outperforming stock, KPIT persistent, all they are working in automation side. And both companies has performed well, even though it is a technology company, but there was a sharp fall happened in overall technology space. But this KPIT and this persistent has really did well in past few months. And still it is in positive trajectory. Maybe the current fall, which was happened from the level of 6,100 to up to this level of 100 DMA, that is 100 DMA. That is a good level of support is there, place is there. So if someone wants to take calculative risk here, so one can take position in this with stop loss of recent over 100-day moving average in this particular stock. Overall sentiment is positive in this stock. As per O'Neill methodology, we can see EPS strength is also there. And even if I talk about the RS rating or relative strength is also looking quite attractive at current juncture. So looking attractive to us, only thing is to manage the risk in this particular stock during the market volatility. That is the thing. Otherwise, this stock has consistently outperformed during this downward trend in this technology space or IT space. Next one, Tech Mahindra. Tech Mahindra is another stock. I think in last webinar and last webinar also I have mentioned that is looking quite attractive, even though there is no such big move happened. But still, it is in consolidation zone. Maybe if market sentiment will improve, and if suppose there will some improvement happened in this IT index, so maybe this may be a outperforming stock across the market or across the sector. So at least at current juncture, if someone is able to manage once again volatility, so looking attractive to us, if someone is interested to take position. So one can take position with stop loss of 980, almost 100 rupees away from here. So maybe one can take position, but yes, this is a comparatively risky bet. So take your call with caution. But yes, it is in consolidation zone, may turn positive in coming few weeks and months. Piramal Enterprise and Cummins. So Piramal Enterprise clear cut in downtrend. I would suggest for time being avoid. That's it from my side. Next is Cummins. Cummins is really outperforming stock in current market trend. See, it is trending above all key moving average. Blue dot is there here. EPS rank or any particular other criteria, that is bias demand group rank, all are looking quite attractive. So positivity is there. It has already given a pivot breakout, and afterward it is in consolidation along with higher top, higher bottom formation here. So positivity is there. If someone is interested to explore this stock for buying purpose, one can explore for buying purpose with stop loss below 50 DMA. Okay, and currently 50 DMA is placed around 1,550-60 range. Okay. Let's check ABB. ABB is another outperforming stock. ABB and Siemens both are outperforming stock in current. See, it is almost in uncharted trajectory. There is a twist to saucer with handle formation. It is near to pivot breakout as per O'Neill methodology. Today's volume was quite attractive. So just keep watching closely. If suppose there will be a breakout, so obviously one can consider this stock for buying purpose. Fundamental parameters as per O'Neill methodology are looking quite attractive. You can see over here EPS strength or bias demand. Outperforming stocks, so maybe move further. Wait for pivot breakout. Today's volume was quite attractive. This RS rating and relative strength line is showing stock is outperforming in market. Let's take Siemens also along with this ABB. So that is also looking same kind of pattern structure, everything. So that is also looking quite attractive. Okay, all parameters and everything. Now next is Mech. So if you take some broader picture of this particular stock, so stock was a consistent underperformer before 2021. But after 21, there was a scenario changed in this particular stock. There was a change in scenario in this particular stock. And afterward, after 2021, this stock is consistently outperforming. Power sector stocks, capital goods stocks are really doing good. ABB, Siemens, all Cummins India, all are example of this outperformance of this capital goods sector. And one among that is this power Mech stock. If you see here, institutional holding here, you can see looking quite attractive. Numbers are quarterly, last 4-5 quarters, numbers are looking attractive. So it is the bullish trend stock. Here on weekly chart, it is showing some breakout. On daily chart also, there is some breakout, pivot breakout. So maybe this particular stock may outperform in coming days. It has formed this double bottom formation as per methodology. So after considering all this, if someone is interested, can take position with stop loss below 50 DMA. Equitas. Equitas comparatively has outperformed to sector, but from the last couple of weeks or 2-3 weeks, there was some negativity. And after that negativity, it has reclaimed or retested 50 DMA. And after 50 DMA, now it is showing some positivity. So maybe move may happen further from here at current juncture. Fundamentally looking quite attractive. Volumes are quite attractive in this particular stock. If I talk about weekly point of view, so weekly point of view, the stock has already given breakout in uncharted trajectory, but somehow it has failed. So maybe there is a consolidation zone. But one thing is there is a level of 70-72 rupees. Maybe 70-72 rupees, maybe it will accelerate upside move. Below it maybe remain in consolidation, 70-72 rupees. Above 70-72 rupees, maybe it may extend its upside journey. So looking attractive. Only thing is to manage the risk during the market volatility. Yeah, this can you take query?
Yeah.
Yes, I have stopped my screen.
Okay. I'll take CDSL BSC. So let me take all those these CDSL BSC AX. All these stocks are trading at multi time frame low. So making a lower low price formation. So for time being, please avoid this stock. Even BSC also trending at lower low price formation. So still more correction. It has not bottomed yet. Even when the stock has bottomed at that will form a base. Like it may trade for sideways pattern for some time. So right now it is not that pattern is not seen in BSC as well as CDSC. And let me see the IRCTC. So even right now it is trading in the sideways range. Trend is negative. One can avoid this stock right now. At key support level will be 550 kind of level. So it might test that 550 kind of level in the upcoming days. So avoid these stocks. And Blue Star. So after the breakout from cup with handle pattern, it has given a very good run, and it has made a power to pivot pattern, like may gain around 25%. And after that, it has witnessed a small profit booking, and it took a support around 50 DMA, but today it breached its 50 DMA. So we are seeing some weakness in this Blue Star right now. So one can exit from this counter at 100%, or one can wait for a breakout level of 1300 kind of level. So right now one can exit 50% and wait for 1300 kind of level for the further downside. The better is book of full profit at current juncture and wait for another fresh pullback from the lower level. Next one is Sonata Software. So it has made a large base formation over here, cup base formation over here, and it has given a very good breakout from cup base formation. And right now it is making a small consolidation profit booking at the higher level. So overall, on the weekly chart from last 2 weeks, it's making a profit booking level, but overall trend is positive in Sonata software. So just wait and watch. Just keep close eye on 50 DMA. One if doesn't this stock doesn't hold that 50 DMA right when it comes down, so one can exit completely from Sonata software, and once again can one can really look into when it comes back to the pivot, make a base. So overall fundamentally strong stock, but right now it's making a less slight profit booking. Next one is Raymond. So Raymond, after the very good run, you can see it has ran almost 3 times from the lower level, and right now it's making a profit, hit a profit booking level. And right now it is close below its major key moving average, 200 week moving average, and right now it's facing that 200 week moving average as a resistance. So overall trend is weak. Overall trend is weak, and at current juncture it's better to avoid. Let this stock make a base, and wait for the another pattern to form, and after that breakout one can initiate a position. So this is regarding Raymond. Next one is GNFC. So here also it's trading in a large consolidation range. So that range is from 500 to 800 kind of level. So from the last, if we see the monthly chart, weekly chart, so it's been trading in the sideways range. But as of this week, it has closed below that key support level, that is 440 kind of level. So this horizontal line, it has break below that level. So overall trend is weak. So we might see a fresh downside window is open in GNFC. One can avoid this stock right now. Those who are still holding this stock, better to exit right now from this stock. So overall trend is weak. Next one is Deepak Nitrite. So here also similar to GNFC, it's trading in the sideways range, large consolidation range actually. So it's trading, making a very tight pattern over here, and trading below key moving averages. So one can avoid this stock right now. Once this basis has been completed, this correction phase is over, and then only one can enter into this particular stock. Next one is
This
okay. Which one?
Ramkrishna Forging, RK Forging.
Okay. So Ramkrishna Forging on the weekly chart, after the large consolidation, it has given a very good breakout, and trading it's gaining with slower pace. On the daily chart also, it is making a large base formation, and trending with this taking support at its 100 DMA as a support, and continuously making higher low price formation. So from last 1 month actually, last 1 month, 2 months, this is the level 294 to 300 kind of 280 kind of level, taking a slight resistance over there. So once it crosses above this level, another fresh bull run will start. On the downside, one can keep a close watch on its 100 DMA. So once the stock closes below its 100 DMA, one can exit from the longer position. So as of now, fresh entry, one can initiate only after this closing about 290 kind of level. with support at with the stop loss at 50 DM. Next one is
VBL.
VBL.
Here is
So overall trend is positive in VBL. Even this it's making after this it has made a gave a breakout cup with handle, and it's currently trading sideways with the positive bias. So once it if it holds above this 100 DMA as well as 50 DMA, so one can still look into this stock and take a small position. Once it breaks out above this prior high, that is 1432. So that another bull run will start in the VBL. So overall trend is positive in this particular stock. One can keep a close watch on keeping their watch list. Next one is
Zydus Life.
Zydus Life. Wellness or life?
Zydus Life.
Okay. So overall trend is positive. It's despite market weakness, it's making a uptrend from the last 3 months actually. Even pharma sector, this particular stock is making it's taking time to gain from the lower level. It's bit slow, but and today and yesterday it has given a breakout from flat base pattern. Overall trend is positive in this counter, and even the RS blue dot is visible, and you can see the buying volumes on the higher side. So overall trend is positive. One can initiate a position with the strict stop loss at its 50 DMA or 460 kind of level on the downside.
Okay, I'm taking ITC at this. Please just show ITC.
Okay, ITC, right?
So ITC is a part of Pharma FMCG, and if you see from the last almost 1.5 years, this particular stock has consistently outperformed to market, outperformed to sector as well as market both. Even from the last almost 2 months, it is showing some sort of consolidation, but overall trend is positive. And today was also positive, so maybe this positivity may remain continuation. And from the long time back, I am consistently almost when rally has started. So I have given a commented, and in past, if I remember, I have commented so many times that its ultimate target is placed around 450, 460. But it may be take time. It may take time actually, few quarters actually. Trend is positive. Maybe after consolidation, this recent consolidation, if this volatility get over, so I can say that this particular stock will once again will be ready to move further in upward direction. So positivity is there from mid to long term perspective in this particular stock. Next one is Opala. So Opala is a part of a discretionary consumption stock, I can say. And there was some problem because of this inflation and inflation-led this job cut. And maybe that is the reason that this particular stock is not doing great from the last 3-4 months. It has given failed breakout in the month of November. And afterward, it is consistently trending in downward trajectory. Meanwhile, it is trending below 200 DMA. So there is some negativity. I would suggest to wait and watch, but I am not saying there is a great level of negativity. There is negativity, obviously, but not that much. So let's wait and watch for time being. If suppose it will cross and hold 200 DMA, so maybe positivity will turn. So that is why I would like to comment. It is better to wait and watch in this particular stock. Meanwhile, as such, there is no any buying entry level as per our analysis. So wait and watch is the best idea in this particular stock. And if you see here on chart, there is a large cup with handle formation happening. So once it will give breakout along with handle, maybe it will turn positive. But meanwhile, it is in some sideways, or I can say negative trajectory. From time being actually. So waiting and watch is the best policy in this particular stock. Next is in the copper. Copper is a part of this metal index. or I can say metal sector. From August, or I can say from the mid of this 2021, so almost quarter to 2 year, it did nothing actually. It remained traded in negative trajectory only. And meanwhile, is also not looking that much attractive. Maybe today there is a bullish candle for candlestick formation. So maybe some short-term bounce back may happen. I'm not denying for that. Maybe 100 rupees or 102 rupees kind of level, 3 rupees kind of level. But overall sentiment is not looking that much attractive. So trading is different thing, but from investing point of view, I would suggest to wait and watch, because metal index is not also looking good. The stock is also not looking good. So if I follow this bottom-up approach, I can say, top-down approach of this particular stock, particular sector and stock. So I would suggest to avoid for time being. Finolex cable. So Finolex cable positive, already trending an uncharted trajectory on high time frame chart. In last 2 months, this stock has gained almost 50% kind of levels, almost 45-50% in last 2 months. So after such kind of move, I can say some consolidation may happen. Otherwise, positivity is there. So this is the buy on dip kind of stock, but this is not the right time to what? Wait for some correction or some breakout, either breakout or correction. Otherwise, overall sentiment is positive in this particular stock, that is Finolex cable. And other cable stocks are like KEI cable, KEI, and this Polycab. Polycab is also looking not looking that much good, but at least KEI is looking quite attractive actually. So KEI is also looking good. This Finolex cable is looking good. So stock is in positive trajectory. Next,
TVS Motor.
TVS. So TVS Motor, this particular stock was also another stock from auto space which has outperformed to market and sector. But from the last 3-4 months, it is in consolidation. And main reason behind this consolidation is that if you take this retracement level, so stock has I can say stock has extended up to 161% retracement level. That is a golden Fibonacci technical ratio. And maybe because of that, technically, stock is consolidation zone. So consolidation is the zone is there, but overall sentiment is positive. Even in this current phase of correction, stock has not breached 200 DMA. It is holding 200 DMA. So if someone is really interested to do some bottom fishing kind of strategy or want to follow bottom fishing kind of strategy, so this is one of the best stock to follow bottom fishing strategy and keep stop loss below 200 DMA from mid to long term perspective. Stock will breach, if stock will breach 200 DMA, then obviously you have to exit it from it. And suppose it will remain holding, so one can remain invested in this particular stock. Okay. Now, shares, Equitas, small finance bank. Equitas we have already discussed.
Yeah, Indian hotels and lemon tree hotels.
Indian hotel and lemon tree. Okay. So let's discuss about Indian hotel. So hotel stock, Indian hotel or lemon tree or salad hotel, lemon tree and salad. All our stock was in positive trend, but from the last few months, actually it is in consolidation. So from mid-term perspective, I can say it is still in consolidation. And if I talk about especially Indian hotel, so Indian hotel is clearly showing it is in consolidation. So trend is positive, even though there was some positive news for this all overall sector in budget also. So overall sentiment is positive, but it is in consolidation zone. Maybe one can wait for breakout. Suppose there is a breakout, then one can explore for further explore buying opportunity. One strategy. Another strategy, if someone is looking to buy at current juncture, so one can buy with stop loss of 200 DMA. 200 DMA is currently placed around 294. So suppose if it will breach decisively 294, so exit. Otherwise, remain invested in this Indian hotel. Another one is this lemon tree, na?
Lemon tree.
Lemon tree. The same strategy one can follow, even though comparatively this Indian hotel is looking quite good in compared to lemon tree. But if someone is interested to take bottom facing kind of strategy, so one can keep stop loss of around 70 and take positions in it. Suppose it will breach 70, 72 level, so exit. Otherwise, maybe, but yes, meanwhile it is in sideways. It may take some time, or it may give some erratic move, and that will force you to exit because of stop loss for short-term point of view. And that is there. If someone can manage the volatility and erratic kind of move, then only I would suggest to buy. Otherwise, it is better to buy this Indian hotel compared to lemon tree.
Next one is NCC and LT.
NCC belongs to this infrastructure. Infrastructure stocks are really doing good. Not all infrastructure stocks, but selective infrastructure. Among that selective infrastructure, this NCC is one of the stocks which are really doing good. And if someone is a very old player in market, so if you remember, NCC was the hero of this bull market of 2003 to 2008. And afterward, it entered into bad shape. There was a debt problem in company. There was some insolvency kind of situation also happened once upon a time. But now company is showing a revival, very good revival, and showing multiple breakout on multiple time frame chart. So looking attractive at current juncture, even in this month also, it has given almost 20% kind of return. So looking positive from mid to long term perspective. NCC. Another one? LT. So LT is another infrastructure stock, clear cutting bullish trend, but it has its own pace. It is generally considered as a defensive kind of play. And if I talk about my opinion or our opinion, I can say that we have quite positive view about this infrastructure space, this power space, this manufacturing space, capital goods space. So maybe it may remain in the sweet spot in coming few months and quarter. Meanwhile, short-term point of view, it is in sideways actually, and it has just retested 100 DMA. So let's see how it is going to react. If there is some another bullish candle formation on this chart, and there is a trend line breakout happen, there is a small trend downward sloping trend line formation on daily chart. So suppose the trend line, it will cross and give breakout about this trend line. So maybe it will give a very good opportunity to buy with stop loss below 100 DMA. Otherwise, overall structure is positive. If someone is really looking to include this particular stock in his or her portfolio for long-term perspective, so I would suggest to start accumulating this stock from long-term perspective in scattered manner. Or scattered manner means one can keep 25%. Like suppose someone is interested to invest 1 lakh rupee in LNT. So just start investing 25,000 kind of in 3-4 tranches. So in my opinion, we are quite bullish from long-term perspective on this infrastructure stock LNT. So in short term, maybe some move may happen 3, 4, 5%, 6% here and there. And that is why I am saying just if someone is really interested to accumulate in a scattered manner. Tukde mein buy kar.
Next one is PFC.
PFC and REC is really doing good in current juncture. Even though from the last 2 months, it has given in the last couple of months, it has shown some correction from the high level. But still from long-term perspective, it is looking quite attractive. Both stock has shown some resilience in current phase of market and well placed on chart, especially on higher time frame chart, weekly and daily chart. So maybe it is a good strategy, good stock from long-term perspective. At least to me, PFC and REC both are looking quite attractive from mid to long term perspective, not from short term perspective. Short term perspective, it may move here and there for 5%. If I talk about stop loss point of view, the first stop loss is 100 DMA, and we suppose it will breach 100 DMA. So maybe next target would be in downside 200 DMA. So in short run, I can say 4, 5%, 6% here and there move may happen. But from mid to long term perspective, both REC and PFC are looking quite attractive.
Next one is Torrent Piramal Pharma for bottom fishing. Piramal Pharma.
Piramal Enterprise.
Yeah,
अच्छा, Piramal Pharma.
Piramal Pharma, PPL Pharma. Someone is asking a Piramal Pharma for bottom fishing. One can initiate a position or
See,
not.
after this demerger from this Piramal enterprise, stock is consistently falling. Consistently falling means from 200 level, now it has reached up to 67 rupees. So technically, as such, there is no sign to take position in this particular stock. But if someone wants to take, it's their own wish actually. I'm not say I don't want to say that you cannot do bottom fishing. Bottom fishing में क्या होता है? Either it will become hero or zero. So it's up to you what you want to do. But at least our analysis point of view, I would not suggest at current juncture. It is better to buy 20% up price, and that would be more safe and convenient from mid to long term perspective instead of buying at current juncture, in my opinion.
So it's let us take a few quick queries. Torrent Power, sorry.
Yes, it's 5:30. So let's check his
Yeah.
speedy manner. So we will wrap up session in next 5 minutes. First one is
Torrent Power.
Torrent Power.
Trading in double bottom.
Torrent Power, from mid to long term perspective, it is trending in sideways. Now, in last 2 days, in couple of trading session, there is a back to bullish candle formation. Maybe it will move further. There is some resistance around 400, 550. Once it will cross 550, maybe more move upside will be there in chart. Looking positive from short to mid term perspective.
Next one is Tata Steel.
Tata Steel, overall metal space, Tata Steel, JSW Steel, all stocks are trending below 200 DMA. So it is better to wait and watch for time being.
Banking space, HDFC Bank, ICICI.
ICICI Bank is looking attractive. If I talk about SDFC Bank, so mid to long term perspective, SDFC Bank is also looking attractive. It has not breached 200 DMA on consistency basis. So maybe this is the right time to build portfolio in this SDFC Bank and ICICI Bank from mid to long term perspective. Short term, maybe here 2, 3, 4, 5% here and there move may happen. But maybe this is the right time one can, if someone is interested to include this both stock in portfolios, one can put 25% at least money, and maybe after Q4 earning, one can, if everything goes fine, so maybe one can add more money in this stock, in these kind of stocks from mid to long term perspective.
We have covered all large cap stocks. So there are question a data pattern and FCL.
Data pattern looking positive. Move may happen. There is a level, I would like to say, level of 1400. Above 1400 maybe turn more bullish in data pattern. Another one is FCL. FCL trending below 200 DMA. Some bounce back may happen. I'm not saying for that up to 250 level, but as such from mid to long term perspective, I would not suggest to buy. But move may happen in short run to up to 250. Next one is Policy Bazaar. I am taking in between just to sort out what next. So Policy Bazaar today bullish pattern formation, bullish candle formation, Morningstar kind of pattern formation after reaching or retesting 100 DMA. So one can keep this immediate stop loss if someone want to explore this Policy Bazaar for trading perspective. So one can keep stop loss of recent low, that is 2,760 rupees for long term trend, for bullish trend actually. As such, sorry, it's my mistake. Sorry.
Yeah.
Sorry.
PB Fintech, Policy Bazaar.
So Policy Bazaar, 1 minute. Policy Bazaar, yes. Sorry, it was my mistake. So now stock is showing some bottom out kind of pattern formation. Maybe it may move further from here. So looking attractive. One thing is that stop loss is deep from here. So if someone is interested to buy, one can buy. But if someone can manage to stop loss, so it is better to buy minimum quantity or less quantity actually. Looking attractive at current juncture at least. It may move further from here.
Next one is Ashoka Buildcon.
Ashoka Buildcon.
Yeah.
So Ashoka Buildcon below trending below 200 DMA, not looking that much attractive. I would suggest avoid.
Let's take last two queries. One is Moltech Packaging.
Moltech.
packaging, Moltech packaging.
904 rupees, na?
Yeah.
Yes, 904. So 200 DMA, it has approached to 200 days exponential moving average or 200 DMA, this black color line. Just wait and watch for a few days. Let's see whether it will hold this particular level or not. As such, as if I talk about momentum point of view, so I am not expecting that it will hold. Maybe sooner or later it will give up, but there is a strong supported current juncture. So wait and watch for a few days. Suppose it will bounce back from here and reclaim at least 100 DMA in upside, then maybe it will give opportunity to buy. But meanwhile, I would suggest to wait.
Last one, Krishna Diagnostic.
Krishna in clear cut in bearish trend after this listing on NSE. And so I would not suggest to buy, avoid from my side.
I think we have almost covered.
So, okay. So it's almost 5:36. So let's wrap up this session. Thank you all of you for patiently attending this session and listening to us. Please be with us on every week actually, either on Bazaar Pe Charcha or Stock Darbar. Thank you for joining.
Thank you.